Warren Buffett literally hates it and says he'd never invest in it. He'd much rather buy a piece of farmland. Ray Dalio, the hedge fund manager from the States, says that it's only a little more valuable than money, but that everyone should have a little. Robert Kiyosaki, on the other hand, says that this is what he works for because he thinks paper money is trash. I'm talking about gold. But what all three of these investors don't realize is that gold gives a far higher return to Indian investors than it does to the average American investor. Of course, as the price of gold goes up internationally, it goes up in India as well. But in addition to that, gold goes up by a further 3% in India because of the rupee's depreciation against the US dollar. Our gold doesn't sit around idly. It does something even while it's idle. There are at least two schemes in India which give returns to idle gold. The first one is a sovereign gold bond scheme. That's a yield of 14% CAGR. Compare this with the US's gold standard of equity investing, which is the S&P 500's total return index, and you will find it's given a return of only 12.9% as compared to the 14% that gold has given